Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day video. It is October 24th. Today we are going to take a look at Polaris. This is one out of the industrial sector. Let's jump right in and take a look. So if you want to know more about this company, check them out at www.polaris.com. That is their homepage where I pull this information from. That is www.polaris.com. About Polaris, since 1954, Polaris has proudly defined, redefined, and then raised the bar again for the power sports industry. It is reflected in the innovation we bring to the products we design and experiences we create for all those who play, work, and think outside. At Polaris, we take great pride in our history as a category pioneer and current position as the global industry leader in power sports. But with the leadership comes a responsibility to keep pushing the industry forward. And there are always more people in more places who could benefit from an innovation to think outside. That's why our strategy focuses on staying ahead of our customers' needs. We will continue to deliver through elevated experiences, inspirational brands, and rider-driven innovations backed by the best and brightest people in the industry. This is what leading from the front means for Polaris. It's a role we embrace to the fullest. And what do? They provide sports equipment, right? So off-road vehicles, ATVs, snowmobiles, boats, jet skis, side-by-sides, general side-by-sides, Ranger utilities, sportsman ATVs, Polaris snowmobiles, snow bikes, Indian motorcycles, slingshot open air roadsters, Bennington pontoon boats, hurricane deck boats, and commercial vehicles and government and defense vehicles. So they have their hands in a lot of different vehicles. You may be familiar, maybe if you've got one of their quads or one of their snowmobiles or boats or pontoons, you're familiar with this one, and you've probably seen some of their brands out even if you don't own any of them. I actually was not aware they had a government arm, but I guess that makes sense, being that they deal in ATVs, off-road vehicles, that they would produce something for the government. Let's keep going here. Now, the reason we are taking a look at them, down 2.69% on the day, big drop on the day. We are talking about Polaris Inc, ticker PII, out of the industrial sector, closed out the day at $89.51. 52-week range as low as $88.20, as high as $138.49. So definitely close to that 52-week low. Looks like they were even further pulled back here, at least as of 5:22 p.m. whenever I pull this information up. More of a drop here. So if you added that together, you're over a 4% drop on the day with the regular hours and after hours drop here. Average volume 628,000. Today was 1.5 million. Clearly see that big drop in the morning. Quite a bit of volatility throughout the day. Overall, down that 2.69% with a further drop in the after hours. Market cap of 5.074 billion. Beta of 1.67. They are much more volatile than the overall market here. Price to earnings ratio very low, 8.3, $8.31. So very low price to earnings ratio here. Nice EPS, higher EPS than their price to earnings. Very rarely do you see that, but that is nice to see. $10.77 earnings per share. Earnings date was today. I'm assuming that something went wrong with their earnings, whether it's future forecasted projections or they didn't meet earnings, maybe had a miss on the top or bottom line here. For dividend is $2.60 paid out on the year. They are a quarterly payer, so we'll see that here in a little bit. Nice dividend yield on this, 2.83%. Ex-dividend date was August 31st. Looks like they paid out September 15th. So if you were to buy them now, you would be in line for their next dividend payout, though you'd have to wait a little bit for it. And a one-year target estimate of $121.46 per share speaks to some potential upside appreciation in the stock price, at least according to Yahoo Finance, where I pulled this information from. I am not affiliated, just one of the sources that I like to go to. I like to go into statistics. I look at for dividend yield theory to see if we are potentially seeing some undervaluation. To do that, we go in here, we go down to dividends and splits. We look at their 5-year dividend yield average of 2.49%. We compare it to its current 2.83%, or over here, forward annual dividend yield, same number, 2.83%. And since it is higher, that speaks to potential undervaluation in this one, at least according to dividend yield theory. Now, payout ratio, very low on this one, 23.96%. So nice starting dividend yield at 2.83%, very low dividend yield overall. So they have a lot of room to increase this, pay down debt, make acquisitions, reinvest back into the business, repurchase stock. So very low payout ratio, very nice to see with such a high dividend yield. Usually with such low dividend payout ratio, you're down in the 1% range. Excuse me. Now, I like to go into financials. You're going to find a lot of good information here. Your balance sheets, your income statements, debt to equity ratios. Are they paying down debt? Where are they at in all of that information? You want to be able to make sure you're looking in there and seeing where they're at, repurchasing shares. We want to look at free cash flow. We want growing free cash flow over time because dividends are paid out of free cash flow. And if we want growing dividends, we want growing free cash flow. They can also pay down debt, pay out dividends, like we said, repurchase stock, make acquisitions, reinvest back into the company. That's all things they can do with free cash flow. 2019, $403 million. Up in 2020 to $804 million. Big drop in 2021, though I want you to look at this repurchase of capital stock. Keep your eye on that one. Some of that drop right there can be accounted for in these repurchase of shares, right? So negative 4,600 right here. But then a big jump back up in 2022 at 202 million. And another big repurchase of shares where they're at today, 520 million. So overall, from 2019 to today, you're seeing free cash flow. Plus, they have increased their rate of repurchasing their own shares. So very, very good numbers overall so far. Low PE, high earnings per share, nice starting dividend yield, low payout ratio. Dividend yield theory says potentially undervalued. Now, I will caveat this with, if we are entering recessionary times, which I believe we've been in for a while, a company like Polaris, people aren't going to be going out and buying new quads, buying new boats, buying new jet skis if there's a recession and people are worried about losing their jobs or are losing their jobs, or even if they're just pulling back and starting to pinch their pennies and watch where they're at with inflation being higher. These are the type of purchases people forego in recessionary times. So that could be a buying opportunity, right? As this company pulls back, as things kind of slow down for this company, they could continue to drop and set a new 52-week low. So I just want you to be aware of that. These type of companies are cyclical in nature and follow the overall economy. When times are doing good, they do very well. Whenever we hit recession, they start to pull back and they don't do as well. Now, another site that I like is stockanalysis.com. Make sure you're picking more than one source so you can back check the information that you are getting is accurate and up to date. You pick any sources that you like. These are just 2 that I like. And of the 10 stock analysts that have taken a look at this, they call it a consensus hold. I would tend to agree to see if this one is potentially going to pull back any further. Again, we may be heading into a deep, prolonged recession, so this type of company will get hit hard. And if it does, there may be a better buying opportunity. If you believe we're not going to recession, maybe the 52-week low here is a good entry point, right? So they have a low estimate of $102. That would be a 13.95% increase from where it currently sits. It currently sits lower than their lowest estimate. I typically like a company when I see the analyst estimates and they're quite a bit higher than their current low. That potentially means we have some significant upside for this one. Average estimate of $120.70. That's in line with what we saw from Yahoo Finance on the previous page. That would be a 34.85% increase in the stock price. And if it happened to hit their high of $145, that would be a 61.99% increase in the stock price. All the while, you could collect that 2.8+% dividend yield that we saw on the previous page. Obviously, if they were to sink lower, that would be even a higher dividend yield. But right now, 2.8% is pretty nice buy-in range with such a low payout ratio. I like to go into statistics here and look at return on equity and return on invested capital and see how a business is using its fund, reinvesting back into itself. I like 10% or better, and as you can see here, return on equity, 44.64%, smoking high, over four times higher than what I look for. Return on invested capital, I like 10% or better on this one too, 21.78%, twice as high as what I'm looking for. Very, very nice numbers overall on this one. And here is EPS growth. I like 5% or higher, and this is smoking high, 18.12% estimated earnings per share growth over the next 5 years, very high, and revenue growth, just as a kicker, 3.29% over the next 5 years. So they do potentially see it slowing down a little bit or just not growing that fast, but they do see growth, so that's good to see. Overall, very good numbers on this one. Definitely one I'm going to be adding to the watch list. Now let's look at the dividends. Like we said, a quarterly payer. They pay out on the March, June, September, December time frame. 24.39, very low payout ratio on this one. Now here is one of the downsides, one of the only downsides I'd see in this one, other than we might be potentially going into a recession, is the dividend growth is slow. This is a very slow dividend growth, 1.57%. With it being such a low payout ratio, I would like a little bit higher dividend growth. though that is offset a little bit by their repurchase of their shares. So if they are continuing to repurchase their shares aggressively, I can deal with a little bit slower dividend growth, though I'd like this to be increased a little bit. At least it is growing, but this would not technically keep up with a regular inflation, which is around 2%. So they need to continue to aggressively buy back shares for me to be interested in such low dividend growth. You can see here August 31st, 2020, 62 cents payout. February 26, 2021, they jumped it up to 63%, or 63 cents, I mean. February 2022 jumped it up to 64 cents, and February of 2023, another penny up, 65 cents. So it looks like they're a penny raise every time, or at least that's what they've been lately. So I would expect in 2024 in February for another raise up to maintain this dividend growth of that 1.57%. It'd be nice if they jumped it up, higher than that and increased this dividend growth. We'll see. This is the vested interest stock screener. This is how I set up the videos. It's also how I look at a company on a high level to see if I'm interested in investing. I do more of a deep dive if it meets 5 of the 8 to be investable, or 6 of 9 if it's a financial company like a bank, where I throw in price to book. Then it goes into my watch list, and then I do more of a deep dive. I estimate a fair value for what I'm willing to pay for it. I do more research on the income statement, the balance sheet, more forecasted outlooks, as well as a discounted cash flow analysis on it, and then decide when I want to add it, if I'm going to add it to my portfolio. Well, that is it for this one. Let me know what you think of Polaris. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us here on this journey to financial freedom. Join the vested interest community, building a community of like-minded dividend growth investors to share our experiences, share stocks like this that we may be watching, share stocks that we're buying, stocks that we're avoiding, tips and tricks that we've learned as investors along the way. We cannot benefit from each other's investing knowledge, but we can certainly we cannot benefit from each other's investing, but we can certainly benefit from each other's investing knowledge. And that is what this channel is all about. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Polaris you'd like me to cover in the Stock Pick of the Day series, go ahead and drop it down below, and I will work it into the rotation. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk. Never invest in any amount you're not comfortable losing. Always do your own research. Invest based on your situation and circumstances, unless select criteria, or seek the advice counsel of a certified financial advisor.